Hello there. This is a brief catch-up recording for an activation topic that you may have missed from a previous session, opening balances in NetSuite. The goal is not to replace the full session, so I want to give you a practical map of the three ways we can bring beginning balances into NetSuite, when each method makes sense, and what to be careful about before posting anything. We'll cover the setup page, manual journal entries, and CSV import. Before we talk about buttons, let us anchor on the purpose. Opening balances are the organization's starting financial position as of the opening balance date. They normally focus on balance sheet accounts, bank balances, receivables, payables, fixed assets, liabilities, and equity. For income and expenses, the cleaner approach is usually to enter transactions going forward from that date, unless there is a specific reporting requirement to bring historical activity into NetSuite. So the key question is, what is the verified starting balance and how much supporting detail needs to be reflected in NetSuite? There are three practical ways to enter opening balances. First is setup, accounting, enter opening balance. This is the guided setup page. Second, transactions, financial, make journal entry. This is the flexible accounting entry route. Third, setup, import export, import CSV file. This is the scalable route when there are many lines or when we want to prepare the data in a template first. The best method depends on the account, the detail required, and how many balances we need to load. The first method is the setup page. Setup, accounting, enter opening balance. I would use this when the balances are simple. The number of accounts is manageable and the team wants a guided entry screen. The advantage is that it is easier to explain and usually faster for a small number of accounts. The caution is that we still need to review the posting date, which must match the posting period, subsidiary, account selection, currency, and how the entry affects retained earnings or equity. This can be useful if we are confirming a small set of starting balances after the chart of accounts is already clean. The second method is a manual journal entry. Transactions, finance, make journal entry. This is often the most controlled method because the entry clearly shows the debits and credits, posting date, memo, and supporting documentation. It is useful when the opening balance is not just a simple screen input or when we want a clearer audit trail for the accountant or auditor. The main discipline is that the journal must balance. Debits must equal credits, and the supporting schedule should explain where the numbers came from. I would consider this for balances that need careful review, especially if they connect to the audited financial statement presentation. The third method is CSV import. Setup, import export, import CSV file. This is the best route when the volume is larger or when the data is already prepared in a spreadsheet. Check your file cabinet for the CSV template available for your opening balance upload if one has been provided in your account. The key is preparation. We need a clean CSV, consistent account names or account numbers, the correct subsidiary, date, debit and credit columns, and any required classifications such as department, program, or region. CSV import is powerful, but it is less forgiving. I recommend testing the import, reviewing any errors, and only then committing the final load. This may be the better route if the opening balance detail has many lines or if we need to preserve a structured schedule. Your consultant or pro bono coach can help guide the CSV template, field mapping, test import, and error review so the final import is completed cleanly. Here's the simple decision guide. If there are only a few straightforward balances, use Enter Opening Balance. Now, if the entry needs stronger review, supporting explanation, or adjustment logic, use Make Journal Entry. If there are many lines or if the information is easier to prepare and validate in a spreadsheet first, use CSV Import. In some cases, different balances may need different handling. For example, you might use one method for simple summary balances and another method for detailed balances with many lines. If you are unsure which method fits a balance type, discuss it with your coach or consultant before posting. Before posting, I recommend this checklist. First, confirm the opening balance posting date and posting period. For example, the 31st of December 2025. Second, use final reviewed balances from the approved source schedule, not a working draft. For example, your audited financial statements. Third, confirm the chart of account structure, especially parent and child accounts. This is important because opening balances should align with how your organization presents key balance sheet areas such as assets, liabilities, and equity. Fourth, confirm whether segments are needed for reporting, such as department, program, or region. If the values are not yet reliable, it may be better to keep the opening balance entry simpler. Finally, after posting, run the trial balance report in NetSuite for the opening balance date or period. Compare the report totals against your approved opening balance schedule before moving forward. The goal is simple. NetSuite should match your approved opening balance records, so your financial reporting starts from the right position. Thank you for viewing this recording, and I hope you are able to complete your opening balances soon.